With inflation increasing and the fiat currency losing their values across the globe, it is important that we are contemplating ways in which we can continue to build our wealth without having to worry about the inflation spikes and the deflation of the fiat currencies that we're going to be spending. And therefore, it's important that we find a way that we can invest our money, that it is also growing and progressing. And we're going to be looking at 8 wealth building vehicles that we can utilize in this time to ensure that our wealth is being built out and is not being affected as significantly by inflation as it would be if we just had it saved as fiat currencies. Welcome back to Ira Living. In this video, we're going to be looking at 8 wealth building vehicles that we can use in this time in order to ensure that we're increasing our wealth portfolio and that we're hedging our money against means that will reduce the deflation of our money if we were storing them as fiat currencies. So starting off, the first one we're going to be looking at is gold. Gold is highly regarded as a tangible inflation hedge, a liquid asset, and a long-term value store. From King Solomon to Mansa Musa and the Ashanti kings, gold has always been a way in which they manage, maintain, and retain their wealth. And therefore, understanding that gold continues to have that value today is important for people who are looking for avenues in which to secure their wealth for the future. Number 2, real estate investment. Investing in a physical, tangible space allows you to secure your money in a way where it's constantly going to be growing in value. Now, for some people, that might mean that they're going to be investing in buy-to-let. For others, it might mean that they're going to go on to renovate and sell projects or operate as developers. For those people who do not have the startup fund required to invest directly in real estate, you also have the opportunity to add to your portfolio and build out a real estate portfolio. Invest in the Real Estate Investment Trust, REITs, which pays out dividend to you as an investor. Number 3, bonds. Whether you're investing in corporate or government bonds, you are lending your money to bond issuers and you will be paid interest on your money that you've invested. 4, funds. So whether you choose to invest in an exchange traded fund, ETF, or in a mutual fund, these are programs in which your money is pulled together to build out a portfolio in which you're able to invest in stocks and other forms of investments. Number 5, money market accounts. These are pretty similar to traditional savings accounts, except they pay out higher dividend on your money that you've invested. And number 6, dividend stocks. These are stocks that pays out cash dividend once or multiple times in a financial year. And number 7 is collectibles. So collectibles are where you collect rare items such as art, wine, sports memorabilia, and vintage products that will over time increase in value. Number 8 is commodities. Now, investing in commodities is to invest in raw materials such as land, different forms of agricultural field, different types of energy sources, and various kinds of metals, because these continue to be in high demand and they're increasing in values as the years and the decades go by. Now, whichever of these vehicles that you decide that you're going to invest in, ensure that you do your research to see which one best serves your needs and also works within your risk aversion, and therefore be able to make an informed decision as to how it's going to impact your portfolio. Remember, financial literacy is revolutionary. It has transformed my life, and I believe that it can do the same to yours.